You may not know of the name First Brands Group LLC, but this company owns some names you have almost certainly heard of. Fram filters, Autolite spark plugs, Trico wipers, Cardone remanufactured parts, Raybestos brakes, Centric brakes, StrongArm lift supports. The list goes on. They also produce parts for brands such as Michelin's wiper blades, and they own Champion Laboratories, which produces filters for a lot of brands. Now, First Brands Group is not a public company. Public companies have to report financial data to the public, and private companies don't. Because of that, there's no way to access data that I can make into a nice downfall graph for you. But an FT video stated that at last count, which it didn't state when that was, there was $6 billion of debt on their balance sheets. It built up a lot of that debt acquiring its large portfolio of brands. However, in addition to that, it had billions more of debt off of their balance sheet, tied up in supply chain finance. This is still a developing story, but the articles I'm reading are stating that the company has somewhere between $10 to $50 billion in debt, while its assets are only stated as exceeding $1 billion. Last time I was covering automotive aftermarket news, I was taking a look at the changes that were made to the Fram oil filter lineup. Fram and Champion Labs started out as two separate companies with their own oil filter factories and tooling. Even after the two companies were under the same owner, it seemed like they kept those two products separate. Earlier this year, I noticed that some of the Fram oil filter part numbers were showing up on store shelves with distinctly Champion Labs-like features. While it has been months and I still haven't heard anything about the old Fram factory shutting down, it made things clear that something was up. Walmart was also preparing to switch to Purelator from Fram for its Walmart-exclusive name brand oil filter. However, the Walmart store brand SuperTech oil filter appears to still be a Champion Labs product. Given the big economics concern this year has been tariffs, could they have played a role in this company's struggle? It's hard to say how much, but it's important to point out that a lot of products this company produces are made in the USA. That doesn't tell the whole story, because raw materials and manufacturing consumables may still have to be imported. So, what happens next? Well, Chapter 11 bankruptcy means that a reorganization effort will be the first thing attempted, rather than Chapter 7, where a company gets stripped of assets and dismantled to pay its creditors. It appears that First Brands secured $1.1 billion in financing to keep production going while this gets sorted out, which is good news for companies like Walmart and Advance Auto Parts, which have a lot of shelf space dedicated to First Brands products, at least as far as Walmart is concerned in its automotive section. While the company itself may still survive, this could have an effect on other areas of the market. First Brands was frequently taking out short-term loans in private credit markets. This is not a finance channel, so I won't be going into what that means today, but I encourage you to look into it. What do you think is going to happen with First Brands Group? Do they own any brands that you strongly like or dislike? Let's talk about it in the comment section, and thanks for watching Cars Simplified.